Welcome everyone to Admiral Markets. Thanks for joining us today in this strategy webinar where our focus is strategy. So glad that you could join us today on this 6th of August. The difference with Tuesday and Thursday is the fact that we're really focusing on parameters and rules and guidelines, not necessarily good setups or so, although of course that is part of the strategy as well when we look at a strategy. But we might look more in the past than only now, but we certainly will look at the current price action. So once again, welcome to this webinar. Before we actually start, we should warn you of these two disclaimers. Basically, first of all, the material here is intended for a global audience. Please take into account that the information in this session may not be suitable for everyone. To find out if this is suitable for you and to get the corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact that appropriate entity. Also, the risk warning here stating that trading for exchange and other financial markets and products is considered high risk and it may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned on this slide as visible now, and of course on the admiralmarketsglobal.com website mentioned earlier. As always, I thank you for your attention. And now we can continue with the webinar. We are basically using this checklist, or I'm using this checklist, trend, opportunity, filters, trigger, and entry method, using fibs, trend lines, moving averages most of the time, and pivot points. These are the strategies we normally look at: the moving average strategy, the candlesticks and pivot points, Fibonacci's, and the Tenkan parabolic. Today I want to introduce a new concept. It's not a strategy necessarily that is fixed, formatted, and totally, ready to implement. It will need maybe just a tad of own interpretation and a tad of own testing. But I will discuss the groundworks. It's different than these four. It's something that we've never discussed before, but could be interesting too. It's not as straightforward and non-discretionary as number four, but it could be interesting for you. So, of course, if we have time after that, we will continue with these strategies. Before we do that, though, let me take a look quickly at the calendar. We have pound manufacturing production, and some medium and lighter news throughout the day. So, by the way, before we start into this strategy, I do want to spend maybe a few minutes explaining what I think could be an interesting break before we dive into the new strategy, if you don't mind. I think the pound dollar is setting up for an interesting break. Now, unfortunately, we have the pound news, so that all depends on how you want to, how your personal view is towards that risk that there is. But the pound dollar has been breaking lower and lower since this morning, and I'm in this pound dollar personally already from an earlier break here. So that's up not many pips, but a few. So all of these bottom breaks could have been potentials for that downside. Reasons why I like that trade, and I always forget my drawing tool, 1 second. Is the fact that we did have a kind of a double top here. Yesterday's news spike really didn't go anywhere, just retraced back to the bottom, logical bouncing spot because of the news spike. Got the bounce, but couldn't break the top. We got the resistance here as well. So, in this regard, it was just a news event that triggered this, obviously. That's what we were saying yesterday. Be careful of the news. It could spike it up despite the break to the downside. which is what's trying to do. Those things can happen. It could happen again today. But from a technical point of view, I do like the break to the downside. So maybe you're in that trade. If not, then yeah, I guess waiting for a small retracement, maybe back to 65 would make sense, or just skipping it. As I said, there's a news event. The pound yen has a similar break that I was trading it. I took an entry here just at the retrace of the week, back to the weekly pivot point here. That's up just a bit more than the pound dollar at the moment. So I'm traded a bit earlier today than usual. Normally I wait for the news event to finish, but today a bit of an exception. So let's see. I might close it, as I said, before that news event. The euro odd as well is something I'm trading. I took the break. This one is doing the best, actually. I took a position here, and let's see, here, as we broke out of this euro odd consolidation. So all of these have actually taken place already, I noticed, so there's not much to discuss, in fact. But in any case, you can see how you can use the moving averages as they are bending to the downside, moving away from the pivot points, bouncing off the pivots, breaking through a trend line, and still plenty of space as we're well above the L3 and L4. This is the traditional strategy we look on Wednesdays. As people who have joined us more regularly are aware of. And those have been doing well. Now, the pound odd, as I said, and the odd in general, I was looking at yesterday as hopefully as a continuation to the downside. That didn't happen because of the pound news here. The pound news spiked it up, so that odd strength really didn't occur yesterday. And unfortunately, I think it was Graham who was in the odd. He was the short, and that worked out well. Fortunately, for him, I was saying that doesn't look too good, and that's a pity. Sorry for that. Looked like that we would get that Aussie strength. So I hope that Richard, I'm not sure if he's in here today. Not sure. No. Well, yeah, Richard, if you're here, let me know. But yeah, we did get the Aussie weakness actually, despite this up pretty strong bullish candle that I viewed as a break of the weekly pivot here. Oh, this one here, but that didn't happen. The Aussie strength really didn't happen, nor against the pound. In fact, the pound, of course, pound odd, obviously more due to the pound because of the news spike here. But anyone who did take a trade here to the opposite side did well as well. Look, this is, of course, how we have to be flexible, or preferably want to be flexible. This was a breakout here. Trade if traded before the news, but the news event spiked it back to the opposite side, and we had a crossover of the moving averages here. So if you take this breakout candle, you got all of these pips to the upside. Right? This too is a breakout trade, but then to the opposite side. That was a good 68 run. So not obviously not all these pips have to be captured in that run, but plenty of space to capture 30, 40, 50 to the upside. The euro odd, instead, the pound odd, of course, made a big retrace yesterday. The euro odd didn't, so it's looking more corrective in its pattern, and it had a pretty good fall here as well. So this looks more like a pullback, and we are getting the fall this morning. So that was what I was trying to capitalize on the euro odd. And the pound yen breakouts on the 15 and pound dollar. I didn't see any particular breakout besides that. I mean, the euro dollar obviously also was breaking lower. Yes, that's true. I just like the other ones a bit more. Did anyone else see a breakout earlier today or anything they want to discuss regarding this strategy? This strategy also can be traded on the hourly, so we can take a look at that. But I wanted to quickly discuss the 15 because it's more urgent. But otherwise, I don't see anything except these. Pound on maybe could join the ranks of a downtrade, but after such a steep drop and so close to the weekly pivot point, I would want to see a bounce before taking any break to the downside. If you're wondering about the pound out. Otherwise, I don't see anything particularly special. All right? So regarding this strategy side of things, the other strategy, the new strategy, and then we'll take a look at the same strategy, this band strategy, let me call it this way, band strategy on the hourly. We just looked at the 15, on some of them at least. Now let's talk about a new strategy. This is called tunnel trading, basically. This has been invented by people who call themselves tunnel traders. So what it is basically is you have on the chart the tunnel. That's it basically, which are two EMAs, 136 and 144. Now, these numbers probably seem familiar to you, or most of you, or some of you at least, because we use those, we have used those as well in the past. These particular EMAs are kind of like medium-term EMAs, and how the tunnel traders use them is basically on an hourly chart. And what the tunnel traders are waiting for is price reaction at this tunnel, and they're trading it at the tunnel, either to the reversal side or as a retracement, depending on situations. All right, structure. So that is the opportunity when the price gets back to the tunnel trading. Now, the tunnel traders don't really reveal exactly how they trade it. They do give some tips. They do give some clues. For instance, the take profits that they use are Fibonacci sequence numbers, and they, for instance, use scaling out, where they would target 89, 144, 233, 377 as the max, because normally speaking, on the hourly chart, you wouldn't see much more than that, right, before you get a retracement. All right, even 55, they would target these levels as TPs from entry. Now, the exact mechanism, how they trade it, is not disclosed in the document, but that I have. But the what do I want to, now I lost my track of thought. The idea of 136 and 144 is just to make a very easily mental reference of where price is towards the long-term trend, and when you get a retracement for more of that potential trend. So the whole idea is to make trading very simple, to make trading basically very intuitive, something that could be traded maybe even as a group, as they did with 3 people. They were trading 3 currencies, and they had shifts of 8 hours. All right. The exact entry, how they do it, is something they didn't reveal. But I personally would not be looking at entering just as price hits it. That I think is in my opinion, too dangerous, because price could accelerate through those levels pretty fast. So we have various ways one could tackle it, right? One could view it as the opportunity when price gets there and then zoom into a lower time frame to see candlestick patterns at the 1 hour tunnel. One could wait for 1 hour patterns at the tunnel. 1 hour price action patterns at the tunnel. One could wait for price to close back above it, for instance. So those are all methods, or wait for fractal breaks. All right, so here we can see obviously that price has had an up impulse, retraced back to the tunnel. So this is an opportunity. One could take this candlestick pattern or the close above it, maybe this one for instance, for the upside, right? And then we got our initial surge of 23 pips, which is not too much, but we eventually hit 55 pips on this spike here, and the next spike we go up for 90 pips. Let's see if we continue. No, that's it. So all of these movebacks to the tunnel represent potentials, and if you wait for the candle close above it, then this will be the entry candle, this will be the entry candle, and this will be the entry candle. All right. Now, if you use the 1 hour fractals bottoms as a stop loss, then the first two, don't go anywhere, but the third closes for some profit. No, yeah, a bit, not much. Especially the fourth would be the biggest window. In this case, of course, longs would be taken on this candle and this candle. Those didn't go anywhere, but not much is lost if the trail stop loss is used below the fractals. Let's take a look. About 15 pips probably. Now price crosses through the fractals here. So we get a switch of the trend basically. In that regard, the difference between this situation and this situation here is the fact that price broke through the other fractal. When you had here support fractals, price never broke through those, right? And closed above it again as entries. Now compare that with here where we had support fractals and entries, but price actually broke through it. So what does that relate to us? That there's actually a reversal potential if we break through the blue fractals there that are bouncing off the tunnel. So a more aggressive trader could take this as a reversal. That's the point. Then we retrace back, obviously here to the tunnel, and we don't go anywhere. So this is a moment where price doesn't continue with its trend, and we want to. This is some smaller losses here, obviously. When the tunnel then hops back to blue after a failed trend continuation like that, you might want to be a bit more careful with taking trades if this is flat, and that's why sometimes using obviously other elements is important to not to get too much of a whipsaw here, like patterns for instance and trend lines. If someone were to take trades here as a breakout back up, for instance, remember that the fractals act as a trail stop loss potentially, so this is actually a positive trade here to the upside. Price then reverts back down, and if anyone took this wick here, it's actually a small positive as well, so it doesn't look it's not as dramatic as it might seem. In the meantime, though, once you have red, blue, red in a row, then you might want to avoid taking trades in this zone as a filter and wait for a more established trend, which basically happens here with this shooting star at the tunnel, although to be very precise, price missed it by 4 pips and price stayed below it. So this is one of those cases that if anyone would have taken this trade, it would have been a very good, obviously a good run down on the euro dollar. And it went down all the way for 233 pips here, which is one of those fib numbers. So we're back at the at the tunnel, price closed below it here, which would have been the sell signal. Still, because of the fact that this is a problem, it could be retracement, and then the fractals would be as the guideline for the trail stop loss being moved, and now the trail stop loss would be above these tops, locking in these pips. Yep. So that is basically the idea of tunnel trading, using a very simple concept for recognizing opportunity and staying in for swing trades. Now, I'm not sure, maybe the concept could not do too bad on the 15 or even 4-hour chart, but the tunnel traders were using it on the hourly. So how about the pound dollar? Well, obviously it had good setups, as we can see here and here. And more recently, price did come very close, but just missed touching it. So that's the question if anyone would have taken that right there, but it was very close. This was a phase of consolidation, which personally I knew, so I would probably not have been trading much of this. But if you go step by step through all of them, most of the time probably would not be all too dramatic because of the trail stop losses and the point that you're waiting for confirmation. So yeah, you're going to have places where it goes for a good run. You're going to have places where price does not, or price consolidates. So it's requiring patience in those phases and trying to catch those bigger runs with the swing trades. All right, let's take it this upside here, for instance. Let's see. We had a touch here and a touch here for upside. Prior to that, we had resistances here, here, and here. They didn't go too far though. And then we had more of a consolidation. Let's see. This one would have been trail stop loss. This one would have been here. Here, no touch. Price broke through it. Here we have the trail stop loss. So the trail stop loss helps a lot with reducing the risk that one can use or one has if the trade doesn't get a follow through to the desired direction and you actually get a push through to the opposite side. This fall is not something that is tradable. I mean, unless one were to look at the counter trend break, but that's already a bit different concept. I mean, then you have to use a trend line like this. It's really a trend line, not much of a tunnel pullback. Price broke through the tunnel, didn't get back to it, and just fell. It only got back here and here. So this fall would not be catchable. So the tunnel traders use the 136 and 144 EMA. Now, this is more of a swing trade, whereas when we're looking at the normal moving average strategy, the band, let's call it the band, I am using either 136 or 89 in combination with lower EMAs, like 21 or 34, to provide an idea where price could have more opportunity in the market faster, right? This is something that is maybe good for on the 15 as well, swing trading, I don't know. This is 136, 144, but these traders use it for swing trading. So the pound for the 50 minutes, excuse me, I use the shorter time frames to get more of a setup. Let's take a look back at the Euro-odd, for instance, and compare it. Here on the Euro-odd, for instance, when you compare that 136 and 144 EMAs, to using 89 and 21 on the 15, right? It's just a bit different because obviously with the this is how it looks like, right? We had a price moving below the 21 below the 89 EMA, and although it came close to maybe, let's say, crossing over, as soon as the band started to pull down, in my opinion, it's still a respect for that downtrend, although it was a crucial spot, let me say it this way, because also we had the weekly and daily pivot point at these levels. So obviously, if it then breaks to the opposite side, it's a counter trend break. But as soon as price started to break below it, I saw it as a with the trend 21 EMA break to the downside. That's why. Now, if you compare that to the tunnel trading, you wouldn't see that opportunity with the tunnel trading probably. So there are not going to be as many opportunities, but the whole idea is more of a swing trade idea, so that you're trying to capture those bigger pips at occasions, like for instance 144, 233, and 377 at the most extreme case. Now if you compare that to this on the Euro-odd, oh, actually on the 50, well, this is the 50-minute chart, of course. Well, actually on the 50-minute chart, price did go back to that band, but as I said, it's an hourly thing. If you use it on the 50-minute chart, actually, there was that back to the tunnel as well. Let me check the hourly. Okay, in this case, there was also an hourly setup by coincidence. Price was actually, well, actually the tunnel was flat, so there was really no preference here, I would say, to up or down when looking at this. Because it just switched pretty fast from red to green to red to green to red. So this does not seem to have an advantage. But by coincidence, the price was at the tunnel. But that's just coincidence. What I meant to say is that obviously there are going to be less setups when using longer-term moving averages. But the interesting part about these moving averages is the fact that they're kind of like an interesting balance between very long-term or long-term and, let's say, short-term. So it allows you to stay in a trend for longer because it captures a swing trade better, right? Whereas the 21 or 34 price is going to go back to it and cross it often. You can see a big run like this on the band, like this is not good zone obviously, but you see these bigger falls at occasions. So that's where you want to get the mileage here too. That's the whole goal. So the goal is to identify trend changes, but not too soon, not too late either. It's kind of like that medium middle zone there. Now I did see a study on moving averages, and they actually recommend lower as the most optimal, profitable. They recommend EMAs. It was a very intensive study, and the best ones actually were, for instance, a 30-ish with a 50-ish, or a 25-ish with a 40-ish. So roughly between that, let's say 25-50 zone. Let's see, pound CAD. Good to see you, Darshan, by the way. Let's take a look at pound CAD. It looks like a break, but I don't trust the break. It is let me use a different template quickly. There, that's better. It is definitely a potential wedge / bull flag that is occurring after a big run up. So yes, but the thing is that here this is being broken. We had a good daily close above it, and the wedge seems to be breaking to the opposite side, to the upside, sorry, which is in line with the trend we had prior to that. There's a lot of resistance here. So the pound is primarily weaker against the dollar, not so much as against this CAD. Indeed, the CAD is weakening against the dollar as well, against the euro, if I remember, as well, against the Aussie. So it's a lot of CAD weakness in this, not so much maybe pound strength, I would say, at the moment. Yesterday's candle was a pretty interesting breakout candle that did close very near the high, that broke these local resistance levels here, closed well above it as well. So it's an interesting breakout indeed. I noticed that as well this morning. However, looking at the fact that there's still so many tops here, I am a bit reluctant still. I would say if this weekly candle closes strong, there's maybe a decent chance of a breakout indeed. Now that still requires 3 days of waiting. So, but this weekly candle close plus a retracement of that weekly candle maybe by just a bit could be a weekly candle upside continuation. If the weekly candle closes with a big wick, then it doesn't really look like a good breakout. But for those that don't want to wait till this week candle's over and see how that week breakout looks like on the weekly, then let's take a look on lower time frames. Looks like a bull flag, excuse me, on the pound CAD. Yeah, it's indeed a tight consolidation following that surge up, so it looks bullish to me. So I guess as soon as the maybe the pound news could send us up indeed, but this could, yeah, this consolidation can break both ways depending on the pound news. Absolutely, I wouldn't say there's any. Obviously, the upside is something that would be more aligned with the previous impulse and the strong AO, but the news could send it both ways really without any problem. What else? The pound dollar. Let's take a look. Yeah, same for the pound, in fact. And I see that the pound dollar is having a bit of a headache, so let me take a look at that. Losing a bit of momentum already, which is off of the daily S1. That doesn't come as a surprise. So let's see the next 30 minutes or so. Anyhow, back to the pound CAD. Looking at the strong AO readings, one more upside doesn't seem that illogical indeed. The 1 hour is pretty strong as well. There could be slight divergence between this top and this top here. But one more follow through to the upside seems pretty likely. So even if it does dip down, there could be a pullback for more upside. So a bounce off of these levels, the L3, the 50 fib and trend line, this zone here, news could send it down and price could rebound back up to the minus 272. So that could be an intra-day week trade, and then we'll have to see once price gets up to this level, can it stay there for the remainder of the week and close bullish on the weekly candle. Richard, I see that you joined. Sorry about this Aussie. I really expected some Aussie problems here for downside yesterday, but you can see that this break didn't go anywhere. In fact, it just only reversed. I was looking for Aussie weakness, like what we're seeing now on the euro odd, for instance, and the pound odd. Although the pound odd didn't happen here, we first had a strong upside due to the news event before we got that downside. Actually, this upside, the close in reverse here, not a bad thing if one took that with the 21 strong, the 89 already pointed up here. So you had the bullish environment here after that. But the Aussie, let's take a look at the Aussie now. The Aussie downside didn't go all too far. It did have a further downside than I expected. At the moment, though, it seems to be hanging in the air. I don't really like this consolidation that it's in at the moment, so I'm not too big of a fan. We do have daily engulfing twins apparently. Don't see much on this Aussie. The Kiwi was a good breakout to the downside yesterday. Maybe some of you traded that. This break, personally, I didn't, but it was actually a good trend line break to the downside. Maybe because of the weekly pivot point. I don't remember exactly anymore. This escaped my attention, but it was a pretty good break to the downside here. I was looking actually for New Zealand yen at New Zealand yen yesterday, not at the New Zealand dollar, but this was a pretty good break yesterday. Let's zoom into the 15 now. Yeah, the problem is that it just has already traveled quite a lot. There's not a proper divergence as yet, so maybe one more follow through based off of that momentum could happen. Where could that continue? Off of this bottom, for instance, off of this resistance zone here, off of the weekly S1, all of this could be resistance for downside here. So maybe a turn at this spot for one more fall down to 84. Which is a bigger support level here, could happen. So it would be more like a pullback, continue down to 84 in this bottom. That seems more clear to me than the Aussie, although we are already pretty close to this bottom. So that's something that we have to be aware of, that this could already be a bounce off of this bottom. And so be careful at the 84, 60, 70 zone. Price might break through it. It might bounce. I would wait for some confirmation at this level. Dollar yen is not that interesting to me. Consolidation going sideways, flat on hourly, 4-hour, and even daily, I would say. Stuck in this triangle here. So, this is a non-event at the moment. What else? Yeah, Euro CAD, just like the other CADs, is looking weak on the CAD. Good run up here. I think this is a first run up, to be honest, because when looking at the aggressiveness here, a pullback and follow through, I think, is a pretty decent probability. So when you look at the weekly candle, a retracement of last week's candle and then a bounce to the upside, I think, is something that could happen. We've already had a pretty strong downside, so some retracement of this leg could happen, and we're seeing bullish weekly and daily candlesticks, and the break above the 21 EMA band here significant because anytime price went into the 21 band, it stopped at the outer level at least. Now we're broke above it. That never happened in all of this downside. So if that is true, and we are breaking here on the CAD, maybe we'll see more CAD weakness indeed, and the pound CAD sustainably moving to the upside. The euro dollar, let's take a look. Or the euro itself. This looks like more of a bouncing spot to me to the upside on the euro dollar, but maybe I'm too early. It is, in my opinion, definitely the downtrend. The question is if it's going to make some retracement higher. I actually expected a retracement earlier, and this is something that I expected in this zone here. Yesterday I was saying, well, I wouldn't be surprised to see a move up to 137.50 and then a resistance. That never happened, in fact, and we got a breakout to the downside. We had this candle, but that was such a good candle, in my opinion, that I took the short on that candle for downside. So, this is something I didn't expect. I didn't expect this candle. I was looking at it as bull flag and follow through up to 137.5 to finish the correction and move down. The downside happened earlier. We had this breakout candle. I thought it was worth trying, and that wasn't a bad decision because we did have that downside during the day. But this is something that I didn't discuss in our webinar because I didn't expect it here. But so that's, sometimes you have to go with the flow and adjust the ideas as the day develops. But so I was already expecting the bigger retracement. It didn't happen, but maybe now it happens because we finished kind of like 5 waves here. It's early. It's probably too early to tell though, because of the strong downside, strong downtrend. Expecting retracement at any point has its hazards. So for that decision of a bigger retracement, I would probably want to wait for this daily candle. If it looks like a hammer or something like that, there'll be some upside retracement after that. We also have the euro and pound interest rate, by the way, tomorrow. So that also is something to be aware of. So those things also play in. So I think the daily time frame is the preferred method for this. If it closes strongly below this bottom, looks like a good breakout. If it's looking more like a wick like this, then some retracement is probably more likely. Thank you, Richard. Let's take a look at Richard's screenshot here on the Kiwi 60-minute chart. Retraces back to 78.6 fib level. Also, all support for the short. Your thoughts? Yes, I agree. That's something that I was also thinking of, and it's roughly similar as you showed here, actually. So, looks like a good idea, a good setup, potential setup to me. The only thing that I was thinking of was the fact that I would want to see some kind of price action reaction to it, potentially on a 60 or 15. It depends on the trader actually how aggressive they want to approach it. But there is a good likelihood that price will at least react to it in some manner. There is a decent chance. So one doesn't have to wait for a candlestick pattern to necessarily trade it. It all depends how aggressive one wants to and how conservative one wants to approach it. But I agree with the analysis. I think there's a decent chance of a rejection here. Good stuff, Richard. I don't know if you heard what I said about the Aussie and Kiwi just a while ago. I don't know if you were multitasking maybe. Okay, good. Yeah, the Kiwi definitely looks better than the Aussie to me at the moment. Although, as I said, the Aussie unfortunately made that downside and not the break here as I was hoping. It's a pity. From a 4-hour point of view, it's almost looking like we're getting a pin bar here. But that still needs some time before it closes. Mm-hmm. 1.5 hours, I believe. But here we already see a bit of a hammer on the hourly. If it does make some kind of correction, maybe, right, a correction could happen towards the 38.2 fib before we see probably renewed downside. Good stuff. Anyone else have a screenshot maybe? It's always interesting to show the charts of someone else. And it's good, I think, just as an exercise for yourself to show your work in a way. So if you have any other screenshots, let me know. The euro odd is still hanging in there, not getting so much follow through. Same for the pound dollar and pound yen. It could just be flat for the moment until the news event. That would be a pity, but what else can we discuss? Does anyone have questions about the tunnel trading by any chance? I was yesterday looking for New Zealand yen weakness because primarily of the hourly chart that was in a downtrend here, and price was making a wedge like this, and a break to the downside after this downtrend seemed like a good setup. It was. The only thing is that I was waiting for a pullback here for downside. That never happened. We just crashed. So sometimes if you wait for pullbacks, you don't get them. New Zealand yen is an example of such a fact. But so yeah, this breakout worked well. There are certain things from a bigger time frame point of view that are interesting on this New Zealand yen. The fact that we had, for instance, double top on the daily. The fact that we are also having divergence on the weekly chart like this between these tops, and if you put trend lines like this, almost looks like a rising wedge. This is just long-term stuff, not necessarily interesting for hourly trading, but right, looks like we're breaking through a rising wedge with divergence on the weekly, plus double top, plus the fact that we're again making a third lower low. And the fact that, let's see, anything else? No, that's about it. 4 hour definitely in a downtrend already. As price stays below these 21 EMAs and 89 EMAs, right? So a hook back maybe as a pullback here to the weekly daily pivot point is something that I think is interesting. We are seeing a lot of signals on a daily, weekly, 4 hour. So with a good break like this, a lot of momentum, I would say a pullback up to the daily pivot point and then down seems like a good trade setup. So that's something that I wanted to share with you as well. The New Zealand yen, good 15-minute. Do we get up that high? It's difficult to say, but if we do, for instance, get up to the 50 fib, it could be already an interesting level to scale in a bit maybe, and the second part could be maybe scaled in at the daily pivot plus 61.8. You can send a screenshot by using screencast.com like Richard. You just have to register. You'll get an account for free basically, and you can send screenshots. So anyhow, I don't see any particular questions for the tunnel trading. Personally, I'm just showing it to you because maybe you're a swing trader. Maybe you would like to have a more fixed moment where you look at the particular pair. Then tunnel trading is good. Personally, I like the band more than the tunnel trading, as you probably noticed. But I wanted to show you this perspective so that you also see something different, and maybe it suits you better. But I like this personally, the band more, the one that we're using more regularly. So this New Zealand yen, something that's on my list of priorities and watch outs. Cheers, Bob. See you soon. So that's about it, I would say. I don't see any questions, any particular pair that you think could be interesting. The odd yen is also having a lot of struggle here, just like the New Zealand yen with these tops. It's going to be interesting what the dollar yen does. It's actually trying to break through the downside here. Look at that. From a wave perspective, those that like waves, I was expecting that a bit. If you look at today's wave analysis, you would see, not that I want to trade it, by the way, but I was expecting here, you see wave W, X, Y, Y at lower at these fibs, the 61.850. So in that regard, from a wave perspective, I was expecting this kind of motion, so that's maybe not so surprising. Not something I really want to trade, though. And pound dollar looks like it's in a wave 4, but the question is, where will wave 4 stop? Euro New Zealand, we can do that, definitely. Any pair that you want to take a look at, no problem. Euro New Zealand. No divergence on the 4-hour chart, making higher highs, although price is moving against the moving averages on the higher time frames. It is making higher highs, higher lows. Ooh. It's not actually really in a spot I like at the moment. It's in an uptrend, but it's retracing at the moment. I would wait probably for either price to dip below the 89 EMA and dip below maybe the support for a reversal trade, or otherwise the other idea could be, if price does fall here, it could obviously bounce at these daily, weekly pivot point and bottom consolidation. It did break through all these resistance levels too, so there could be lingering support at this level, for that bounce. So those are the two perspectives that make most sense. Maybe a small reversal back down, but then a bounce potential either here or here on the hourly chart. So it depends what time frame you're looking at or want to trade it. But that's, if I look at the hourly, that's what I would be thinking of. The 15, how about the upside on the 50? I wouldn't want to trade the upside now. It would have to retrace deeper, as I said. But if it does break above these tops, what would happen if price, let's say, bounces here, pushes above the band, and then moves down? If it then breaks again, I would be okay with trading it to the upside. But I wouldn't want to trade it in the first surge up on the blue arrow. Maybe with the green arrow would be okay. If you're trading it from a 4-hour point of view, or maybe even a daily point of view, let's see, price is actually pushing through to 89 here. In that regard, it could be like a retracement like this. But for that really to pan out, I would probably want to see a reversal candle on the daily chart, something like that. So that could be today, but we'll only know at the end of today. obviously this could be also the point where it pushes through and makes a bigger trend reversal. But resistance, if it does push through, resistance I would expect anywhere along the line between 160, 162, where we have all these tops, of course, in play. Great stuff, Adrian. Let's see. We got the pound dollar 30-minute chart. We got a channel. Agree with that. It does look like a bouncing spot slash support level. Maybe not bouncing spot, but support level at least. So that agree. Let's see what else we have here. We have a yellow dotted line. We got the Camarilla on it. We have a MACD and the ATR. And an attempt on a buy at the bottom of it. Got it. Yeah, it could work out. It could be a bouncing spot indeed, and you can see this consolidation head higher. But I think it would be dependent on the news indeed. For the moment, I would say the momentum is slightly down across the board because of this fall on the 15. Because of course the bigger trend was down. So those two seem to line up, but with a news event like that, you really don't know. It technically would need to really break through this trend line before you get maybe some acceleration. So so personally, I would probably just exit because it could really jump both ways on the news event. The momentum could be over, for instance, if we push through this red line here with the fractal. If we start pushing above that again, that's when I would say, okay, the momentum to the downside is probably getting a bit out of reach here. Great stuff, though. Thanks for that screenshot. Always like to look at other screens and see how others have it set up with their charts. Great stuff. The pound yen is doing a bit better than the pound dollar, in fact, as I see on my other charts, or as I keep an eye on the developments, and it's pushing a bit further. So this is looking a little bit more bearish. Look at the 21 here, gaining angle versus the 89. So there's more momentum than maybe the pound dollar. That because of the yen, of course, as well. Here we see also a pretty good 21 band. That's why I'm saying the momentum is down because of that. I like to trade with the momentum on the 21 band. Although of course it's not a guarantee that the price will always stay above it or continue with it. It's just that this is my own vision that I try to stay on the right side of the trade. That's just the only reason. But it doesn't mean that we will get a follow through. Must get a follow through here to the downside, right? I'm just explaining why I see the momentum down. That's when I say momentum is down. I'm just looking at the 21 band, for instance, or maybe the AO, stuff like that. So let's see. It depends how much if this is. I'm not 100% sure yet. We still have 38 minutes if I'll stay in them, but maybe it's difficult always with the news event. Maybe the pound yen is already up pretty decent amount, so maybe I'll just close pound dollar and stay in the pound yen. Well, I guess. Oh, one more question from Judy. Sorry, I almost missed that one. Would you mind explaining what I mean with bands? Certainly, bands is something that is indicating basically three moving averages of the same number, but they're high, low, and close. In this case, most often I use 34 or 21. In this case, 21, where the 21 EMA is represented by an EMA, 21 EMA close, 21 EMA low, 21 EMA high. What you get is this green band here, and occasionally red, right, depending on the angle. So it just shows it has a bigger footprint on the chart. It has more space on the chart, so that price kind of goes into a zone more than a specific spot. And often enough, price is going more to zones than precise levels. When you hit a trend line, it's more of a zone than a precise level. Fib is even more of a zone than a precise level. Sometimes price does stop at an exact fib number, but it's more a rough area. Price can easily break 1, 2, 3, 4 pips above, below it, etc. So that's why I like to use a band. Sometimes I use 3 bands, but then it gets too clustered for you to look at it. One band I think still is viewable for you, as you in general, as a viewer. But I like it because it gives more of an idea of the angle. It gives a more idea of how wide or big a zone is, etc. So that's when I say band. It's these 3 EMAs. Often enough 21 or 34. So I like the band more than the tunnel personally. I like the closeness of the moving average, so it gives me a bit more practical usage on faster and more current events. And I use the 89 just as a more, let's say, medium interpretation. Well, I guess we'll wrap it up for today. I don't want to keep you here longer than needed because I have nothing really to add. Great, Judy. Yeah, if you have any questions, by all means, no problem. You'll hear me say band quite often, so it's good to clarify that indeed. And yeah, I have templates where, as I said, I even have 3 bands. Not that that's necessarily better, but I think that gets a bit too clustered like this. But if you really want to know what the trend is on multiple time frames, then this is something one could use. You can see long-term down, intermediate up, short-term down. So the pound is a bit of a mixture there if you look at it that way, right? 2 down, 1 up, or 1 sideways. So, but this is a bit clustered. Well, folks, thanks so much for joining. We'll be back tomorrow, the Thursday, with the last webinar before a bit of a break with the webinars, and we'll be back then from the 19th of August. And so I hope to see you in that last webinar tomorrow. And I wish you all great trading and an awesome day in the meantime. Cheers.